Morning, market chameleons, especially. Good morning to you, Dimitri
Good,
Pargamonic. How you doing, buddy?
good morning, Will. How are you?
Great. Happy Friday, everyone. Let's get right to the disclaimer, D. What do you think?
Yep. Good morning, everyone. Thank you for joining us. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. So if you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's a disclaimer.
All right. What are you
Let
seeing
me
this morning, buddy?
Green. So I think I'm going to do what we usually do, kind of go over what's moving to pre-market hours and then take a look at what's coming up on the earnings front. But going forward, maybe in a week or two, I think we'll change up the morning shows and just concentrate on one report at a time. This way, we could answer questions specific to that report, kind of introduce people to reports that they're not familiar with. And I think what we'll do is then create a section on the website where we could put that video and you could search by specific report. So, maybe we'll do something on a pre-market report, go over the features, how to use it, how to read the analytics. And then a different day, we'll do like an implied volatility report, options chain, and so forth. And I think the benefit of that will be that once we put these videos somewhere a new section on the website, you'll be able to go back, search it. And if you just have questions on a particular report, you'll be able to do that. So we'll try that, see, if that, helps out people, especially, when you're just navigating around the website and you come across something, you're like, what's this? How does that sound? Let me know what people say.
Well, that sounds good to me, and I'm sure the chameleons will be happy. So basically, I think it sounds like we're going to be doing a little bit of a webinar every morning. Not that we haven't been doing that, but it'll be more structured. So,
Yeah.
Any questions you have, you'll be able to put them in the chat, ask questions about what's going on. Now, listen, I'm assuming, D, if anything's going on in the market that people want to talk about, we can go to it. That's not a big deal, but just the way we
Yeah.
approach it every morning may be a little different.
It might be a little bit different, or we'll just have a different, another show. I don't know. We'll see how we could structure it, because I do want to answer questions if anything's going on. Somebody wants to see an example, I still want to do that as well. But I think the benefit of it is also just if we focus on one section and get questions, I'll still do it live just so I could get the questions. And because if somebody has a question, then most likely, another person's thinking of the same question. So we'll still do it live, but this way it'll be a little bit more concentrated, on one section. Not so much what's going on today, but more, how do you use this tool from day to day?
That's a great idea. And actually, Brenda and
Mhm.
Chris agree, and no one disagreed. So it looks like a go.
Okay, awesome. So today we're going to just continue on a little bit on the same path, because we still have to build an infrastructure to put this somewhere on the website. We're working on that right now in the background. So right now, that's the plan going forward. But today we'll just do what we usually do and just kind of take a look what's moving in the pre-market hours. We'll take a look at upcoming earnings, and if there are any questions along the way, let me know. I'll try to get to those questions.
Sounds good.
So right now we're looking at the pre-market report. These are stocks moving into pre-market hours. We got the most active stocks, biggest percentage gainers, biggest percentage decliners. Here I see 188 made the percentage gainers list, 31 on the percentage decliners. From that perspective, looks like a very bullish bias at the open. Let's take a look at what's going on in the higher market cap stocks. So I'm going to use this filter here, market cap, 20 billion market cap or higher. So we got 45 that made the percentage gainers list, 6 on the percentage decliners. Again, that's also looking like very bullish bias at the open. One sticks out at me right now. I see Disney on the decliners list down 4.4%. They reported earnings, and do you have any insights on that?
I don't, but my guess would be and you'd have, I know you go into the financials occasionally
Yeah,
and look, I would assume there was a lot built into the number of
this,
new subscribers, and that
yeah,
would be my guess. But I have not seen the news, no.
right. So the maybe some disappointment in number of subscribers, and
I would think, yeah, that would be my, I mean, that's the thing that's been built into it the most. I mean, obviously, everyone's known that the park attendance and that type of thing was going to be way down. So I would think
right
the hype has been the
around the
new
streaming.
subscribers, yeah.
So they're them competing with like Netflix, and then you got Amazon Prime. Which,
Yeah.
by the way, do you use that video service, Amazon? I think we talked about it
You know,
before.
I think I pay for all the video services and probably use none of them. It's
Oh,
all,
no, really? I,
it's the
I don't use
kids,
it.
my wife. I listen to, I have CNBC, MSNB, Fox. I go through all the news channels on so I still am an old school cable guy, really, and
Yeah. Well,
YouTube. And I must say, yeah. So that's about it.
yeah. Well, I'll tell you. I mean, a lot of them are starting to catch up to Netflix. I still have Netflix. I think it's a great service, very easy to use. I like how they organize it. But I started watching on Amazon Prime, and they got their own content on there, original content. They have uh movies and shows I can't find on Amazon. I mean, I'm sorry, on Netflix, that I like to watch because I'm like a World War II buff, and like they have a lot of content on that. But there's a lot of Netflix is getting a lot of competition now,
Yeah.
that streaming service. So, um,
Well, I guess my guess was right. Actually, Robert, our favorite trader from Chicago, was saying this morning it was discussed on CNBC that Disney streaming revenue was off per estimates. So
okay, so there you go. Yep. All right. Well, let's just to save some time. Are there any other questions? You know what? Let me just take a look how Disney. I'm going to just click on it since they reported earnings. Let's just take a look at how their stock behaved historically. So we see this is where it closed, 178.34. It is currently 170.82 in the pre-market hours, so that's down 4.2%. I'm gonna you could go down here and just click on on these news and read it for yourself. But let's just take a look how it behaved historically after reporting earnings. So I see here, um, this is where we are right now, May 13th. Yesterday reported after the market closed. So today's the reaction to the news event. We see heading into earnings, it usually did pretty well, especially 2 weeks out heading into earnings. 82% of the time had a historical run up for an average gain of 3.1%. After reporting earnings, usually did pretty well at the morning. 82% of the time historically gapped up, 18% lower. On average, up or down, the move was 2.4%. This is the range between 5.9% and unchanged. So we see here 4.2%. It's within the historical range, but above the average. All right. So it's still way above the average move, right? These are absolute moves. So it's converting everything to positive, but but it's still within the high-low range. After the opening, this is how it tended to behave. So from the opening price, so we're using the opening price now as our starting point to see how it behaved the rest of the day, right? So it would be unfair to use the previous days as the starting point because it gaps up, opens at a new price. What did it do from the opening price? So from the opening price to the high of the day, on average, it was up 1.3%. From the opening to the low, average moved down 2.4%. Tended though, from the opening to the close of the day, more often than not, it drifted lower. So 91% of the time, it closed lower from the opening price, 9% higher for an average loss of 1.1%. So you can see here, it was pretty weak that day. Besides the gap up, right, in the morning that day, it tended to be pretty weak after the start of the trading day. So that's really quickly, a historical return distribution in Disney after reporting earnings. That's how it tended to. These are the percentages moves around earnings. Okay. I'm going to close this. If there are no questions, we could go.
Someone did have a question about Airbnb, so ABNB. Now it's only been, I think this was maybe only its second earnings. I don't know how much there is to see, but if there was anything you saw,
Okay.
they were asking about that.
When did they just recently report earnings? Let me
I
just
think they
take a look.
reported this morning. Yeah. Or yesterday.
So May 13th. Okay. So looks like yesterday after the market closed. So this is a reaction to that earnings, down 3.2%.
Yeah, the stock's way off its high. A lot of things are in this.
Yeah. Well, I was looking, Netflix, Roku, a lot of these stocks, Tesla way off, way off their high. We were talking about Kathy Wood's ETFs yesterday, right? Well, they're pretty well. She usually invests in these,
Yeah, I think this is one of the companies she buys. Yeah, no, I mean, I don't know if it was the top, but when we actually had a whole show on her ETFs, probably about 4 months ago or 3 months ago. It's literally a lot of these stocks have gone straight down since then. I mean, it really, there's always a bear market somewhere.
Yes. So could see, I'm just hovering over it. So they reported yesterday. Well, after the market closed, it looks like they lost $1.14. That was a little bit better than the expected loss of $1.17. Looks like they came in revenues 886 million versus the expected range 713. So
hey D, I apologize, but John is asking, how did D navigate to that screen he was just had up? I'm not sure.
So,
display, I'm not exactly sure.
So I just went to Airbnb by searching it, and then I used this menu on the left-hand side, and under earnings, there's an earnings estimate versus actual EPS estimate versus actual menu item right here.
All right.
Yep. So you'll just land on the summary page and then just navigate to it from on the side over here. So we could see they beat, right, the expectations. They did beat the expectations, but they're down on a day. And we talked about this. Why would they be down if they beat? Part of it, there's really a couple different factors going into it. One is, well, what are they saying, to the investors going forward? How do they see their business going forward? So even if you had a great quarter, if your expectations going forward are weakening, or you're saying something that people expected different, that's going to weigh in on the stock. It's not necessarily just how you did this quarter or last quarter, but going into the future. The other thing is that these are analysts' expectations, okay? And the analysts are not the ones who are driving the price. The people who are driving the price are shareholders and traders, and their expectations could have been much different, right? So there's that also coming into play. Whatever the analysts are expecting, they kind of put out there as like a reference point, but that doesn't mean that people who built in their own expectations in the stock are necessarily looking at these numbers. So we see here yesterday, I'm just hovering over it. We didn't open up, but yesterday the stock closed 135.75. After hours, up here it was down 1.8%, and it looks to me like it traded as low as 127 after hours and as high as 142.20. And then it closed, at 8 o'clock, it went out 133.30. Today, right now, 135.17. So it looks like, it's heading back up a little bit. So we're not down that much, 0.4. But this is just giving you a quick view what happened yesterday after the announced earnings after the close.
Awesome, D. Hey, listen, I hate to interrupt you because I know you want to get to one of these reports.
Yeah, it's fine.
It's a little bit of a delay between us live and the chat on YouTube. And John was
Okay.
actually asking about the earlier screen on Disney. I'm assuming the screen he was asking was how you went to Disney and how the stock reacted after the earnings previously. I think you were on that screen.
Okay, yeah. So I was on the pre-market. Okay, I'm gonna leave this. By the way, before I leave this, if you're curious what Airbnb is saying, if you click on this, it'll take you to their press release, and this is the actual press release that Airbnb issued regarding their earnings. So in this situation, they're just saying go to our website to read more. But if you click on it, it'll take you to that press release where you could go and read more about it. I'm going to close it. I'm going to come back to the pre-market report just to show you what I did in Disney. So these are stocks moving again in a pre-market hour. What I did was first I filtered these tables. So I went to the market cap and said, show me stocks 20 billion or higher. And Disney popped up on the decliners list over here. So we have a lot of statistics. If you're navigating around our website, you're going to discover there are a lot of statistical analysis, historical data to analyze in the background when you start clicking on stuff. So if you click here on Disney, it populates a table with data. Okay, and these are historical data. This is it right. It defaults to the pre-market VWAP. So that's this tab over here. So you could see what's going on in a pre-market hours. So this is a minute-to-minute VWAP table. All right, so the last minute over here at 9 a.m., we see here, there are 20 trades in Disney for a total volume of 2,914. The VWAP price for that minute was 171.22. That was down 18 cents from the previous VWAP. This is the high it traded at, the high price, the low price it traded at, and this is the bid and the offer at the end of that minute. So you can see the bid, how wide the bid and the offer is. This on balance volume, we had customers asking us to add this on balance volume, and basically what it does is every minute it takes the volume, and if that 1 minute, for example, in this situation, this minute the stock was up, the VWAP was up from the previous VWAP. So what it does is it takes this volume for the minute and adds it to the total volume. So every minute it's either adding or subtracting volume. Okay, so if it's subtracting volume, you could be in the negative, adding volume to the positive. So in this case, this minute, you see the VWAP was lower by 18 cents. And we didn't make up this on balance. So this is a technical indicator out there. You could go read about it, but it was down. So the assumption is more sellers than buyers. So it takes this minute's volume and subtracts it from the previous. So it's basically continuously just adding or subtracting volume to give you an idea if there's more volume upticking or downticking. Does that make sense to people? Hopefully.
It does to me. If it doesn't to anyone, please put it in the chat and we'll try to go deeper.
To answer the question about Disney, I just went here, earnings stock pattern. You have all these other stats, if gap up, gap down, but since Disney's reacting to earnings, I went to the earnings stock pattern over here. And this is the table that I was looking at, which, by the way, this same table, if this is, I just wanted to show you so you see where I was doing it in the morning. But this same table, if you just ever want to go to stock, type it in here under earnings. You go to stock patterns right here. It's the same table, right? So you could go to any stock you want, Facebook, and then you'll see this table in here. Stock patterns.
Excellent. John was very thankful of that. And listen, everyone, be aware, this is why we take the questions. No question is too small to ask because there's and that's why I'm assuming, D, we mentioned at the start of the show, that's why we're going to try to change it up a little bit and give more insight into the website on every show and take as many questions as possible. And again, ask questions on anything. It's not, if you see something being shown and not where it's, and don't know how we got there, please ask that. That's an important question, because you want to be able to get back to it.
Yeah, exactly. And just since I'm on Facebook again, would be the same way. This is what it tended to do during earnings. So even though Facebook already reported earnings, it's not coming up. If you wanted to know, start doing your research ahead of time, you have the stats here. So, it's showing us how Facebook historically did at the gap, at the open. We see that it tended to gap up. By the end of the day, it tended to soften and give back from the opening price. The next day tended to weaken. So these are just showing you how that stock behaved around earnings from a historical perspective. And from the pre-market, since it's already going on, that's why we showed that report, just to make it convenient so you don't have to jump to this report. But this report's already there. If you ever wanted to look at a different stock, you don't have to wait for it to pop up as a pre-market mover. You could just go to this report at your convenience and start checking and doing your research that way. Okay, it's just, I just showed it to you on the pre-market because we're already there. So just to make it convenient, we put it, right there on the same report. What did you? There was another question, Will.
I think that was it. I mean, we've had a couple questions about the Discord link today. Again, that Discord is not run by either Dimitri or I. That was set up by the Chameleon community. So I do have a link and can send it out to you. So just email me at williammcbride@gmail.com and I will get a link to you. And there's, a lot of the chat that goes on here, carries over to the Discord. Some real sharp chameleons on it, and they always have some insight into their feelings on the market and what they're looking at doing. So anyways.
Yeah.
Oh, we did actually Pavel's back. I haven't seen him in a while. Welcome back, Pavel. He was asking, can you get real-time level 3 data? And my answer would be no. Want you to confirm that for him.
Yeah. So a lot of times people ask us, like, why don't you just turn on the real-time data, or why is it delayed? And it's important to know that the market data, this market data that we're looking at right now, we buy this data, right? We have to purchase it and license it, and then we have a license to redistribute and display it. We don't control that data. That belongs to the exchanges, and they have different tiers, for 15-minute delay, for end of day, for real time. And not only do you have to buy it and purchase it and, have a license to do it, but there are different rules around real-time data, delayed data, and end of day data. And as we're looking at our website and how we developed it and the features that we allow you to use on a website, we would not be complying with the real-time rules. All right, so we would have to start taking some of our features away because it interferes with what we're doing, like showing you, having multiple windows up, giving you downloads places, all this stuff. We would have to change fundamentally the website. Okay, so that's why you're not going to see on this website, you would not be able to see real-time data, or if we did do a real-time data, it would not make sense in places, because then we would have to, you would see maybe real-time data here, but you wouldn't see, and then you would see a different data, in the options chain. It wouldn't make sense, to do it that way. So that's, one of the issues is that's one of the issues. The other issue is that we show a lot of data on the website right now. Like here, I'm on the options chain. There's a lot of going on besides prices. You've got all these analytics on the prices themselves. You cannot, real-time data, it comes in as a stream of millions and millions of data points that you have to process in in microseconds, within a second. We're talking about, every time a price changes, every time a volume changes, every time there's a trade on any of these, right? It comes in as a stream. So you would almost not be able to run analytics on it, because all the power consumption would be just to display it, right? So just to display it would take a lot of resources. And if you needed analytics on top of that, it would be almost impossible to do, because you can't crunch numbers that fast, as fast as, unless you're just concentrated on one thing at a time, but not like broad based as this website.
Yeah, I mean, really, we've looked into providing real time data a lot, and it would be a different site if we were to do it.
It would be a different site, and we would be in the price range that I don't think anybody, we try to keep it within a reasonable price range. And anytime we think we could do it reasonably, we add it. Like so far, we've been adding lots of different data to the website without increasing our prices. So we're always trying to be reasonable and staying within where we think is a reasonable price. And, to the community, we're trying to keep their costs down. So that's been our approach, where as we're growing our membership, we're able to split, the costs, spread the costs, and then we add it, right? So that's what we've been doing. But the real-time data, and in any case, this is not a trading platform, so you're doing your research on here, you're doing your analytics, you're doing your risk reward analysis, your theoretical values. So it's not a trading platform anyway. You're not going to be able to enter in a trade and do an execution. That's an execution platform.
Yeah, and that's what we've looked at. If we were going to do it, it would be an execution, and it was a different platform. You would still have to run the analytics side by side if we were to.
Right. Yeah,
exactly. Billy Bob Joe is asking something. I'm not sure where he's seeing it. And I'm just going to read it because maybe you'll know what he's asking. He's asking, What indicator is the break one-day support derived from? Do you know what he's asking? And he's asking also about subdued IV.
Okay, so the 1-day support resistance, the break, I'm looking right here at Facebook. So here's Facebook's, this red line, that's Facebook's closing price, right? That's this red line over here. The green line, that's its 1-day resistance to the top, and the same distance 1-day support to the bottom. That's coming from a 1 standard deviation move in Facebook. So when we look at financial modeling, especially stock movements, we convert things to standard deviations, right? That's kind of like where, because we're looking at range of prices, volatility, option pricing models, that's what they're using, right? Standard deviations, that's volatility. So this is a 1 standard deviation move. We calculate that standard deviation move based on looking at the volatility of the stock in the last 20 days. So we say that in the last 20 days, this is how the stock has moved from day to day, up and down. So if it continues that, we expect the stock 66% of the time to be within this range. If it breaks above the 1 standard deviation, then now it's moving beyond where it normally trades, at least according to the last 20 days. If it moves below, it's breaking down below where the range it usually trades relative to the previous day's close. Okay, so think of it as it's making more than 1 standard deviation move to the upside, or more than 1 standard deviation move to the downside. That's where this is coming from.
Excellent job, D. So many questions. We didn't even get to the report you wanted to go over, upcoming earnings in Target and CRM. But
okay, well, at least we answered. Yeah.
No, we got a lot of questions. Actually, we got a minute left. Robert was asking, is there a shorter delay that could work? Say 5 minutes instead of 15. I told him nothing that we're aware of. It's either real time or a 15-minute delay. Those are the two.
Right. So we don't, right. So these are not things we control, right? Like we don't say arbitrarily put it 15 minutes, because to us it doesn't matter if it's 1 minute or 15 minutes. It doesn't matter to us. We're just going to process the data. The exchange dictates that, right? So it's the exchanges who own this data, and the data that they own is a revenue, it's a revenue source for them, right? They sell this data, and they have their rules and restrictions in place. So they don't have an option for 5 minutes. They don't have an option for 10 minutes. They have real time, 15-minute delay, and they have end of day. That's how they look at it. After end of day, it's historical. But the closer you get to real, that's how they divided it up. And we're just complying with what they're telling us. If the exchanges, if you could, the way the exchanges work is they go to the SEC, they create this. This isn't a rule book, actually. This is actually in the SEC rule book, because they have to go to the SEC, get this approved, and that's how they control the data coming out of the exchanges.
Excellent job, Dima.
They made a real time, if they
Yeah.
made a reasonable real time solution, we would do it. But from what we looked at, the way they want to, the way they have it priced right now, it would be unreasonable, because we would have to really raise the prices on the platform. And I'm not talking about,
and it's not only the cost of the feed, it's what would have to happen to the platform is a big deal as well.
Yeah, we would have to change the platform and the feed, because they have rules around it. And so, we're talking about like price. It's not like 20 or 30% more. It's not like that. We would have done that. We're talking, could be like in the thousands. We're talking about like thousands of dollars more per user. The way they're telling us how to do it.
All right, great show, buddy. You have a great weekend. Chameleons, you have a great weekend. Thanks so much, D.
All right, thanks everyone. Stay safe out there. Have a